Okay, guys. Good morning. Good morning. How's everybody doing? Hope everybody had a great weekend. Can you guys hear me? Everybody in YouTube, I'm talking to you guys. Okay. Hi, how are you? Okay, my name is Juan Verano. I just wanted to drop by. Can you guys hear me? Just wanted to drop by, say hello. I want to let you know, guys, what are you guys about to experience, right? We're gonna see some of Oliver's best traders trade live, right? You can see him on the left side. It's Dr. Dan. It's gonna be Paul. They have, I think, more than 10 or 20 years of professional experience, right? Not just trading, like professional experience. They've been doing this for a long time, and they've been with Oliver for a long time. This is part of you being part of the program, the self-serve program, the Kickstart program, whatever program you guys are choosing, right? You guys are going to be able to trade live with some of Oliver's best traders, right? Years of experience. They're going to show you why they're doing what they're doing before they do it, right? They're going to explain this to you. And this is part of what we do every day, right? And we get trained every day real time. So um, we know how to confront the real market. It stops just being theoretical. It stops being just educational, and it becomes something of training. Of course, you got your educational material, right? You got your where Oliver's teaching us the techniques, the tactics, the subtleties, the different scenarios. Yeah, we learn. That's when we learn. But here's when we put into practice also, okay? And that's very important, right? You can't just, Oliver likes to say, you can't just read a book about being the best basketball player in the world and be the best basketball player in the world, right? You got to train, you got to practice. And these sessions are meant for that, right? There's also, of course, an educational component to it because they are teaching us what to do, but it's mainly so we can execute it properly. We can train and execute our trades properly, right? So there's great value on being part of this chat rooms, right? And we have access to this every day, right? We have access in the morning at the open, and we have access in the afternoon, right? So just take advantage of this. Be aware of what you have access to. It's a great deal, right? Being able to see professional traders, not just somebody that read a book or read an article on the internet and is trying to teach you. It's not somebody like me, maybe, that only has like 1 or 2 years of experience trading Oliver's method. No, these people have like 10, right? And 10, in some cases, 20 years of experience, right? So welcome. Take advantage of this. We're about to start. We'll start in about 3 minutes, right? You guys, if you have any questions, you can, of course, write them in the chat. But it's going to be mainly focused on what we are doing in our chat room. And I will suggest, if you have any further questions, you talk to the person that you've been talking to during this period of Black Friday, right? There's a wide staff, right? They're all very willing to answer any of your questions. So make sure you talk to them. And if you haven't joined us, I mean, what are you waiting for, right? So we will start in about 2 minutes, right? So I'm gonna drop off the mic, and we'll wait. All right, we'll wait for a chat room to start. Welcome again. I hope you guys enjoy it, and hopefully see you within the program. Okay, bye, guys.
All right, sound check 1, 2. You guys got this room jammed up here. There's so many people trying to log in. I can't get in my own room. This is crazy. Couldn't even log into my own chat room. The lines are full, callers. All right, let's get this camera going. I understand we have visitors again today, so welcome to the Open House Cyber Monday edition. Here's the prior low. It drops to that pivot, holds, bounces all the way back up. So it's pretty key support level that we're sitting on right there. So we're pinned under the 200. You can see it nice on a 15-minute too. It's very clean right here. So as we come down, that is going to be support. You see your hourly chart as well. You got a rising 20 right there. So this is a bearish gap into a bullish location, right? So there's a little bit of down room, a little bit of room on the downside, to drop 362.50-ish. We hit that, see if we can hold. All right, if we break under that pivot, then we can get more bearish on the gap. So for right now, bearish gap but bullish location does not make me want to short the market at this moment. Okay. All right, let's look at some other things here. We don't have to play the market. Apple with a nice igniting bar, guys. That looks pretty good right there. We can do the give back bar here on the 2-minute. All right, looks pretty solid. So you have igniting out of a base, right? It's always a bullish play, igniting out of a base. Trying to clear this hourly pivot, so it should give us some follow through. And look for a check up there, 118. Look for a whole number check, okay? And if you are on the open house, some of these terminologies you may not be able to follow right away. There we go, guys. Already got a double. There's some profit out the door. You may not understand all the terminologies because you're not in the program yet. So at the end, I can do some review and wrap up and go over some of the trades. But for now, I just want you to be familiar with how it would be in the chat room. I want you to just sit back and kind of enjoy the show, so to speak, and be like, if I was in there every day learning stuff like this, look at our Apple rip. See, you want to be able to do trades like this. Look at that. Monster move off the open, guys. Beautiful play. 2-minute give back bar. Already booked at 3-1. Still rocking. Still rocking. And what's nice about this is you can see entry and exit points on this platform, right? So if I turn this on real quick for you, I'll show you, and then I'll go more at the end. You can actually see, look at that. You talk about playing a give back bar and just crushing that entry. And there's our nice first piece of profit, and we're still going. Look at that. Boom, boom. It's a beautiful thing right there. All right, so now we're going to trail it out. Definitely break even or better. And if the 5-minute holds the close and we do not fall all the way back to our entry, we're going to pile right back in over the top of that 5-minute bars high. And we're going to do it again. We'll do our add back. So a little dip back. If we can hold 118, that's great. And then we can look to add back and go for more, okay? All right, what else we got coming? So you understand what we're doing on Apple. Break even is in. You can look for the add back, 5-minute high. We should be able to get some follow through there. All right, Facebook's doing the opposite here. Facebook's showing a little weakness. If we get down here to that 200 on the 15-minute there, that's a little bit of support. So although we do have, it's a very bearish bar, guys, but anytime you get a bearish 5-minute open like that or a 2-minute open into 15-minute support, it's hard to want to short the lows until you're past the support. So market's down, Facebook's down, but we're really, really close to support. So I'm going to hold off on the shorts until I see that we can break through the support. All right, AMD, beautiful rip. 5 minutes setting up for possible give back bar on AMD. It looks good, especially if we take out the whole number. We should be good to go for more on AMD. So let's see, is Micron following suit? Whoops. Micron, not quite as strong. Intel is kind of blah. Yeah, so stick with the AMD for now. Okay, so here's your 5 minute, right? 5 minutes closed. This is gonna, if this holds the 118 area and we set up the little ribby or the give back bar here, we're gonna do that long over the top, right? We're gonna add back over the top. If this gives up, it was just the early pop and we come all the way back to the entry, trade's over, all right? So we hold, follow through, play the 5 the same way we played the 2, do the add back, go for a second run. My mic is too hot, Glenn. My mic is too hot because the profits are burning up. Burning up. No, seriously, how's the sound? Is it too much? I didn't change the settings. Yeah, it says the volume is the same as it was. So raspy, that's my voice. Yeah, that's just my throat being a little raspy today. It's that change in season, and I got that little sore throat feeling. Energy level's good though. Feel good. Just got the sore, scratchy throat. Feels more like allergies than anything. No, the headset's in the same position. I think you guys just haven't heard me in a while. You forgot how explosive I am. You got used to those nice and mellow sounds. Paul keeps it down here. Keeps it very close to the vest. Very quiet. I'm going to come in a little bit hotter. Come on, Apple, let's do it. The sultry voice. That's right, Jess. The sultry. Oh, wait a minute. You guys can't see the comments, can you? Are we on private mode or not? Can you guys see the comments or no? No, you're on private. Okay, I'll have to make sure I repeat the jokes then, because you guys are like, what is he talking about? I can't see what he's saying. And the reason we do that during the open house is just so that you don't get distracted by all the comments flying through. I can keep up with them. The ones that are appropriate, I can repeat. The ones that don't apply or are going to cause confusion, we're not getting distracted. All right, so there's market breaking hard through that pivot, right? So now, if we get pinned underneath this, and we can get a follow-through bar, we'll go for more. As we hit this whole number right here, I think you're going to see a bounce first. So since we did break through the pivot, it's fairly significant on the break. So if we get stuck under that, we'll look for more bearishness on a second move. If we get to 362 and we don't break through it much further, I'm going to play the reversal off 362. So this is what I want to see as far as a pivot break. It's a pretty good push through. We just got to hold it now. So like a GBI and a 2 or something would give us follow-through opportunity. Or if we stretch right to the whole number, we can look for a counterbounce into the next sell. Meanwhile, back on Appalicious, there's your 5-minute give back bar. There's your add back over the top. Yes, that's how we do it. That is how we do it. And it's time to take another chunk of profits right there. So that's what we're going to do. Oh, how's AMG looking? Oh, Teddy, did you get my friend request? AMD's looking pretty good. Little give back play. Lock that break even on that one, okay? If you did that 5-minute, keep that break even in. A nice little 2-minute ribby right there. Had a nice little pop for profit. Make sure you keep your stops in there nice and tight now. Break even or better. Anybody outside the U.S. doesn't get that joke. I know it's a commercial, guys, here in the States. So the friend request joke, it falls on deaf ears if you're not in the United States. I apologize for that. Manja, if you're getting an error that says hotkeys have an invalid account, then you need to do one of two things. Make sure your local order entry is set correctly in the level 2. And then in your hotkey preference, make sure the drop-down account is set to default. So one of the two places is not set correctly. Support can help you walk through it real quick if you need it. But that's where that error comes from. Can you give me some more Appalicious love? 119 is hit and still rolling. It's all it takes. One good trade, baby. One good trade a day. It's all it takes. And this was textbook. Guys, we had so many things working right on this. We had a 2-minute give back, a 5-minute give back, a 2-minute ribby. This trade is off the charts. $1,000 trade, baby. Doesn't take much. Doesn't take much. I'm going to lock this in here, bar by bar in a 2-minute. Okay? Blocking it all down, bar by bar on a 2-minute chart right there. That's it. We're in, we're booked, we're tight. We're done. All right, so Apple's in the books. Very nice trade. Way to start the day. Way to start the day, Danny. One, you get $814 on the Apple. Nice trade, dude. Nice trade. Right now, I know a lot of people are wondering the same thing. Like, well, if the market's down, why are you trading Apple long? It's the exact reason why. Think of it this way. It's called relative strength. Okay, a little tip of the day. If the overall market, of which Apple is a huge chunk of the index, right? If the overall market is down and Apple is rallying, then think of how strong Apple is all by itself, right? The whole market's down and Apple's like, yeah, screw that. We're up. Like, damn. That's not just Apple up because the market's up. That's Apple saying, I don't care about the rest of the world. We're going higher off the open. And out of a base, you guys know this by now, right? Igniting bar out of a base, easy play. Easy pop. Now, will this stay this way all day? Probably not. When there's no earnings, right? When there's no news, when there's nothing specific like that to drive a stock all day, then typically you will get pairing. So by the end of the morning session, either this won't be as far down or this won't be as far up, right? At some point, these are going to start to drift back to the mean. So either the market's going to bounce or Apple's going to kind of stall a little bit. Now, if this was an earnings day or a big headline news day, then you might see all morning or all day where it diverges, right? But off the open like that, igniting bar, it's an easy play. Easy peasy. All right, let's see. What else you guys got here? Square short. Let's take a look. Square short. Depending on where you hit it. Yeah, if you caught it right in here, it's not bad. Now, square's a little wild, and it's got a huge spread, so it's not one of my favorites for newer traders to handle. See how volatile it is and how much the spread is on that thing. I mean, you're looking at 30 to 50 cents a spread. You're getting 50 to 60 cent jumps all at one time. For a new trader, I would say stay away from that. If you're a skilled trader, we come down to this 50-minute low right here off that pivot, and you're looking for a quick hitter. Let's see, 6 to a whole number play at 206. Yeah, even with the spread, forget it, man. The spread's huge. Don't mess with it. Spread's off the chart. Not worth it. Not worth it. Let's see, what are you doing with the BABA? The BABA GBI off the gap. Yeah, it's a huge gap down, right? So are you going to get a lot of follow through out of that, off of that big of a gap? That's always that's the tough part when it's that big of a gap down. I like the GBI setup, so if you did that trade, I would just say put your break even in right now, and if it can't follow through and sell off, you might end up with a sideways for a bit until that 8 MA catches up, and you don't want to be sitting in there waiting for the 8 and then take a L. So if you don't get the immediate follow through, just kill to break even, find something else to do. The spread on square, look in your level 2 and look at the bid and the ask price. So right now it says like 59 by 0. That's 40 cents, right? This is 50 by 99. That's 50 cents. Now this is 38 by 78. That's 40 cents. So it's all over the place, right? If that calms down in a little bit after well, this might get a little more extended here. I like this whole number play, just can't get a good entry on it. If it calms down a little bit and you see the spread get down under 20, then maybe you think about it. But anything there's that big of a spread, it's not worth it to me. It's just too hard to control the risk. And when I started this morning, I told you it was the most important thing was learning money management and how to control risk. All right, Apple off the 2-minute buy setup here, guys. Possible second attempt. I'm skipping the 5-minute ribby. If you did the 2-minute buy, I like it. The 5-minute ribby, I'm going to skip it. We didn't get our 362 on the spot. I was kind of hoping we could stretch all the way down here. We're going to pick that off on the bottom, get our whole number trade. We didn't get it. I'm not going to chase it long yet. I really want to see that number tested because if we hit it and blow right through it, then you're going to get some acceleration probably down to this pivot low here, right? If we just barely touch it and we don't break much, we're probably going to get a little bit of a bounce. So here we go. If we can get that whole number trade to test, we can look for a down and through play. It's close. It's close. eBay at 50, like eBay 50. Yeah, I got a good base right there at 50. I like eBay 50. Whole number play. Get that move down there. And if it bleeds through there a little bit, look for that right off of Haas there at 77. Just take it off of that. But yeah, it's a good look right there. A little slow. It's not climatic. It's just a nice slow methodical drop. You can hit that 50, little dip through, pop back up, pick it right off. JPM, nothing. It's dead in the water. Don't like it. Doing nothing. Look at that. Sideways, blah, 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 blah. So, if you clear out this 5-minute high, you could look for a counter move if you break this low. Yeah, you got some gap space here. If the market stays weak, I'd like the market to take out 362 before I'd want to short the banks. Right? If the 362 fails, there's room to drop another 50 cents. Then you could go pick on stuff that's weak and look for the banks to fail. Okay, if the market dips through 362 and holds that, we're probably going to get a little bit of a counterbalance for that 5-minute sell setup. We don't have any major econ today, right? Last time I did this, I forgot we had a 10. My clock was off, and I was waiting for 11 o'clock, 10:45 number. It came at 9:45. We have nothing today, right? Home sales, it's not going to do anything. So 10 o'clock data, but it's weak, so irrelevant. I mark it down to that number. Let's see if we get the little poke through play here. Yeah, see, Apple not really doing much here. It's kind of like they're reaching the extreme point here. Market's really stretching down. Apple trying to stretch up. Like this is a big divergence here. One of these is going to give. Either market's going to pop back towards the 8 or Apple's going to pull back towards its 8. They can't keep going like this for too much longer. AMAT, kind of on a little slide. What do you want to do with it here? You want to buy AMAT 180 from a 200. You're talking about the early trade up here. Yeah, 5-minute topping tail, right? And then pin under the 200 was good early short. Slow follow through here. Not really tanking too much. Off your 180 play, you barely got 1-to-1. So got to have it for sure, and then hopefully it can get down here and test 81 even for you. It'll be a nice follow through if you can get that to work. How often do we have these sessions? Well, every day. I mean, if you're in the program, we do this every day. This is what it's like to be in IFT program. That's why you're visiting to see what you would get if you were in one of the programs. You get to come in this room every day. You get to watch the magic happen daily. Snap. You want to do the snap? Let's see. Snap. You didn't quite get to the 200. Yeah, if it gets there, cover short and stop and reverse long. Either one. Good location. All right. Here's our poke through play at 362 spies. We got to think about break even quickly, guys, because it is, pretty good follow through on the bearishness. So let's put the break even in. That's enough of a bounce. If we're going to hold it, we should probably hold it from here. I don't want to retest. There we go. There we go. Let's get our 30 cents. Come on, baby. Come on. See that trap play right there? People try to short that break at 362 and then they get whipped like this, right? It's too far extended down to do the short at that moment. You need the counterbalance first, then see if you're going to roll over and you get the next sell set up. But when people go short after the fourth and fifth bar like that, they get picked off, and that's why we flip and we do the long and we take our scalp profit and we say thank you very much, Miss Market. And you put your break even in. And then if you can get a sell set up that turns and rolls over, then you can think about your short. But the worst trade in the world is trying to short that after a multi-bar drop. So much so that I play it the opposite direction because it fails so many times. And how did I learn that, you ask? By shorting it and failing so many times. That's how. That's how, by many donations, charitable donations that were made to the market over the years. So I used to try to tell myself, like, I'm just donating to somebody else, that's all. I'm paying a tuition, donating to charity, whatever. Because you start thinking about you're losing your money, it'll drive you crazy. You got to find a better way to spin it in your head. There we go, baby. Look at that, Danny. See what I tell you? This is where the magic happens. I know you were thinking, if you're new, you're like, God, why is he going to buy that? He should be shorting that. It's going to fall. Oh, my God, the world's over. No. Counterbounce. Counterbounce. How do you time the reversal? Let's see. Pretty well, actually, but. Time it. Like that. You time it like this. That was the wrong key. That was a rookie mistake. Try to add some more and accidentally hit the wrong button. So there's your buy. And there's some profit. And now we're break even or better. That's how you do it. That is how you do it. It's called a whole number trade. And there is some value. Isn't that pretty? That's how you buy a bottom, boys and girls. If you're not convinced already, you don't even need to be here the rest of the open house. You can just leave now and fill out the registration form. Now you show me someone else that knows how to pick off markets like this, and I'll join their program. Apple. That's pretty good, wasn't it? I told you, man, you guys gave me a few days off. I am pumped up. I am rested. I'm on fire. That was pretty funny, wasn't it, G? That was. All right, so 50 cents, that's a beautiful trade. And again, risk reward is so key, right? So remember I told you if it pokes through the whole number and it does not sell off down to here, you're probably going to get a little bit of a snapback, right? So you're like, well, what if it's only a 1/3 retracement or 1/2 retracement? It's all about the risk reward profile. So if this trade breaks through the whole number by 10 cents, look at that, 89, right? So it's 11 cents. And then as it comes back up, we're going to buy it over the number with a stop under the low. And you always want to factor in a little bit of slippage, right? So let's call it 15 cents. So it's a 15-cent risk, and you get a 60-cent profit. That's 4 times your money. Think about that. It's pretty good, right? I mean, 4 times your money. Michael's one of our recent grads, guys. 6 times the daily target in 25 minutes. That's what this program can do for you. He just made 6 times his daily target. It's not even 10 o'clock. Job well done, sir. Job well. Now, he's not a brand new trader either, right? He's been through the program. He's been around. He's paid his dues. He's taken his lumps. And now he's reaping the fruits of his labor. It's a beautiful thing. Lots of lumps, he says. Look, that's what makes you good in the end. You're not going to get through this. Listen, I'm going to tell you right now, if you are a thin-skinned person, or you're a weak-minded person, or you're a defeated easily person, do not do this as a profession. I'm just telling you. Like, you know, if you're like my little girl where you're in your world, the sky is still pink and unicorns are real and fairy princesses come to life at Christmas time. If that's your world, then don't trade. Okay? I love watching her exist in her world. She's 6 right now, right? It's the greatest thing ever. The innocence of youth, the purity of it all, like every day in her world is just magical, right? It's a beautiful thing to watch. It's sad that the reality is going to come crashing down on her as she gets older, but right now it's pretty cool. But the trading reality is you are going to get your butt handed to you. You're going to get your head kicked in. You are going to take so many hits along the way, it's not funny. And for most people, they can't handle it, right? It breaks them. So a big reason why the success rate of trading is reportedly so terrible, right? You look at them like, oh, day trading is impossible. No one makes money, and this and that. Statistically speaking, a lot of traders fail at this. That is 100% true. And the 2 biggest reasons are expectations by the trader going in are not realistic. So they end up quitting long before they're ever able to say they failed, right? They failed in their mind, but they never gave it a full chance to know if they could do it. Guys, tighten up your, look at this. See this little higher low? Look at that. A little higher low right there. Hooking 8. Nice. Let's take this all the way out. Let's see if we can get all the way back to the 8. Tighten up the trail, though. This new pivot low right here should be your stop. See if you can squeeze out a little bit higher. So anyway, they give it, they don't give it enough chance, right? And then they quit long before they should as far as the learning curve is concerned, because the learning curve is steep in trading. Right? So if you think that, oh, I'm going to get this and I'm going to figure out trading in 30 days and I watched some videos on YouTube and I studied a class and I'm ready to go, you're already setting yourself up for failure because your expectations are not realistic. Right? The idea that you're going to do this that quickly and be good at it is not going to happen. You'll understand it quickly, but I just need you to know up front, guys, I don't want anybody coming in here with these false ideas that they're going to be millionaire traders in a month. It's just not possible. I've been doing this 20 plus years, so I'm pretty good at it. Okay? I'm not saying that to brag. I'm telling you, with 20 years, you'd be good at it. How many people do you think are going to gut it out that long? Right now, it didn't take 20 years to be profitable. I understand that. But it took more than 5 for me to get good at this. Okay? But I didn't have a program like this. I didn't have daily chat rooms. I didn't have somebody to ask questions every day. Hey, am I doing this right or not? So a lot of times what happens is you end up going down a road and a rabbit hole of well, I don't know if I'm even doing the pattern right. So either A, you give up on the pattern too soon because a few times it didn't work and you thought you were doing it wrong, when in reality there are just possibilities and probabilities that things are going to fail even when they're good looking patterns, right? Like there's a chance that when this thing bounced back through 362, it didn't go very far and it could have failed. I would have taken the loss. So what? So not everything works every time. But if you don't know that, if you can't ask somebody after you do a trade or have someone look at your chart and say, was that right or not? And they say, yes, it was, it just didn't work, keep doing that. Over time, you'll be successful. Or, no, that's wrong, here's why it didn't work, here's why you should avoid that trade in the future. If you don't have that feedback, you could spend months wasting time doing the trade incorrectly or giving up on a good pattern because you're not doing it right. And that's what happened to me. I spent so much time having to go through it enough to figure it out. Like, okay, I think I've done enough of this. You know, a few hundred of these, I think I can rule it out now. Instead of a handful and someone going, no, this is why that's not working. Stop doing that. Could have saved myself so much time, right? So much effort. And then even when you know what you're doing right, you still have the tendency to want to try to do something different. It's nice to have somebody every day saying the same thing to you and you watch them do it the right way. And then when you try to lean in the wrong direction, it doesn't work. Like, yeah, yep, no, that's not going to work. He said it wouldn't and it didn't. And okay, I've touched the stove a few times. It's pretty hot. I think I'm going to stop burning my hand. I don't think I need to do this anymore. Okay, but setting yourself up with unreal expectations is the easiest way to fail at trading, right? It's the easiest way to get discouraged at trading. If your expectations were, look, I'm not saying it's going to take this long, but let me flip the script on you for a minute. If we get down here, guys, for the retest, we're going to do the same trade again. Okay, remember I told you we get to the 8 MA? Look at that. Got to the 8 MA. Then you get the sell set up off the 8, right? You don't do the short here. This is when people get out of sync with their market cycle. This is the counterbalance. Boom. We get to the 8 MA. Boom. That's your sell set up. Boom. Now watch. As this bar gets to this low, the same people that shorted it here, they're going to try it again. They're going to watch it come all the way down, break that low, then they're going to try to short. And they're going to be way late. And even if it follows through a little bit, they're not going to make much. And we're going to look for the retest, the low to bounce one more time. Okay? And then if the bounce is weak and it rolls, then we're going to short down there. So it's either short here or break, rally back, and then short again. Do not short a multiple bar drop to support. Write that down. Tattoo it on your forehead if you need to. Do not short multiple bar drops into support. This right there. See that? Do not short that. Every time. 9 out of 10 times you're going to get burned. Okay? Do not do it. Do not do it. Anyway, let me flip the script real quick. If you are told that it takes 10 years, and it doesn't, all right, I'm just trying to extend. When they weren't professional, you didn't see them struggling. You didn't see them failing. You didn't see them screwing it up all that time. By the time you see them do it, they've already gone through the learning curve. They're on the other side. They're experts. Now you're seeing it. You're like, oh, it looks pretty easy. Right? Had you watched me trade 15 years ago, there's a reason I wasn't in a chat room. There's a reason I wasn't moderating. It wouldn't have looked so good. It would have looked a lot different. Okay, but what I'm telling you is the methodologies, the skill building, the learning curve, the speeding of the learning curve, all that comes from being around people that know how to do it and can show it to you day after day. And you would think, well, man, if I saw it for a couple of days, wouldn't I get it? Well, go watch Tiger Woods hit golf balls for a couple of days and then go play golf and tell me why you can't hit it like he does. Even this day, and I'm not even talking about Tiger of 2000. I'm talking about Tiger Woods right now. You still couldn't play as good as he can, and he's struggling, right? Go watch the guy. You want to really feel bad about yourself with your athletic ability? Go watch the Champions Tour. Go watch these 60-year-old dudes striping golf balls down the middle, 270, 280. 60 plus years old. Are you kidding me? They're 60 something. And you can't do what they do after watching it. Just go watch them. Sit on the range, watch them hit balls, and then go do it. They're in their 60s, for God's sakes. Don't tell me they're superior athletes anymore. Why can't you do it? Because they got 40 plus years of experience. That's why, right? If they're in their 60s playing pro golf and they started playing under the age of 10, most likely. So for 50 years, they've been hitting golf balls like that. That's why you can't do it. You haven't been hitting golf balls for 50 years. All right, so you got to get rid of this notion of just because I saw it, I'm going to do it. You have to put in the time. You have to put in the reps. You have to have somebody around helping you, showing you, teaching you, so that you can speed that process of eliminating what doesn't work and knowing what should have worked and just didn't versus what's not working because you're screwing it up. Because there is a difference, right? Good trades fail and bad trades work. Okay, think about that for a second. I didn't say it out of order. Good trades will fail. Bad trades will work. And if you don't know the difference, imagine where that's going to take you. You do a couple bad setups and they produce profit, and then you think you got it, and then all of a sudden the next 20 in a row don't work, and now you're like, well, I don't understand what was happening. And then you do a couple bad trades and they fail, so you just scrap it. Meanwhile, the next 15 would have worked, but you never did it. Right? Think about that. And those people that are going to get caught. How about MU, Micron? Let's see. How about Micron? I don't see a whole lot happening here with Micron. We had a 5-minute bar that, tried to ignite pullback. Like, here's your 2. You didn't even get the 2 to trigger. So there's your ribby. That didn't trigger. I just kind of gave up. Your 5-minute gave up. I don't really see much after that. So I'm not sure what you wanted to do there. Visa, let's see. Visa, it's everywhere you want to be. Oscar, you got a short going on Visa. Okay, so a little sloppy there at the open. Sideways, sideways, sideways. Possible GBI right here. And then it cracked. Not bad. A little 2-minute right there. So there's the break of the pivot. There's the bounce back up. There's your little self setup. It's not bad right there. I like this little 2-minute sell, right? So here's the prior low at the open. Tested once, twice, 3 times. There's your break, right? Do we short that, guys? I just gave you the rule. 1, 2, 3, 4. Do you short the multiple bar drop into support? No. You short the sell setup after. Here it comes. There it is. Right? Don't do this one. Do after. Because you don't know if that bounce is going to be short or deep, right? It can be a little bounce. It could be a half. It could be a reversal. You wait for the next sell. Do not short multi-bar drops into support. Same on the other side, right? You don't go long multiple bar rallies into resistance. Same concept. Gene, $1,000 day. Dude, book it. 1240 to be exact. That's stellar. Book it. Book it. The sessions are this. No, you have guys. The program comes with the entire methodology. It's in on-demand format as well as live classes. There are study sessions weekly, plus the daily chat rooms. I don't know what else. I don't know how much other stuff you want. There's endless supplies of education. So don't worry about that. It's going to be more you getting in here and doing, right? This is a doing game. You can watch it from the sidelines all you want. Got to be in there. Reps, reps, and more reps. You did Microsoft whole number. Let's see, Microsoft. There you go, 15-minute 200. Do not short multi-bar drops to support. Look, another one. Look at that. Same thing. Down, 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 down. 1, 2, 3, 4. Here comes the fifth bar, about to break the pivot, and no follow through. So where should you do it? On the next sell setup. Right? You let it rally. Look, rally up here, then short. Do not try to short that bar. You're always going to get that. Say always. 80% of the time, you're going to get that bounce back first, then you're going to get your follow through. Right? You're not going to get big follow throughs on multi-bar drops. They're going to whip. Rarely are they going to extend. And if they do, you play the extension. Right? It's an easier trade to forego that short and just, if it follows through, then you just play the counter and it'll be usually a better trade because you're not in way up here, right? So that little bit of extension you get from the pivot break, by the time it stops you out on the trail, you don't make much. You're going to make more on the reversal, right? So we get closer here to these pivots. Let's see which one, where can we get to? We're just going to root for it now. Stretch out a little bit more. I'm actually going to try it early. This is super aggressive, but we're having a good day, so we're going to go long right here on a gut feel play that says we're extended into pivots, and we're probably going to bounce. Okay, I'm going to give it 30-cent stop. As soon as we get up over 80, 85, we'll go break even. So the 30 cents is really just for a brief moment in case it just fails instantly, which can happen, right? There are times that you have a gut feel and it just is dead wrong. And that's okay too. My other saying I like to tell you, those of you that are new, write this down. There's a lot of writing down today. Write this down. It's okay to be wrong, just don't stay wrong. Okay? Another way to say it is professionals are often wrong. Novices often stay wrong. Meaning if a trade doesn't work, cut it loose. The minute you hold and start adding and trying to fix it and buy more, and it's done. You're going to blow up. Your statistic waiting to happen. JPM short, let's see, man, the banks usually follow the market, right? So this is that multi-bar drop of the pivot. You want to wait for this to bounce and give you the GBI right here, right? So if it gets stuck under the pivot and then can crack the low and break the pivots, then you can get some follow through, then maybe your banks will go with it. All right, remember the other rule too about being far from a 20. When you start stretching out way from a 20, it's hard for the thing to keep going without the bounce. And where the bounce, guys, look, market cycle is the most basic concept. It's also the most overlooked concept, okay? So a market cycle, waves, some people call it waves, cycles, it's the same thing, right? What we're saying here is that the market moves are in waves, right? Or cycles that go like this. So a basic wave cycle, right? Or wave theory cycle. This is a wave. That's a wave. Okay. When you uptrend, the wave gets bent to the upside, but it's the same type of moves, right? All we did was we took this wave and we tilted it, right? We took this end and we turned it like that, so it went up. If we have a down move, it's this same principle, but we take this end, we point it that way. So now it looks like this, right? It's the same thing, guys. So there's just one common market cycle that happens over and over. It's either just drifting in a sideways form, right? So it either does it in this form, or it tilts itself up, or it tilts itself down. Okay? But it's the same thing. So uptrends and downtrends are just defined by, was that wave cycle moving to the upside from its parallel, or is it moving to the downside from its parallel, or is it just going sideways? That's it. Okay? Survive. Okay? Got to 8. Remember I told you when it gets over 80, 85, that'll be enough. So the high hit 85, it came back down, break even stop is hit. So we didn't bounce much, and we're too near the support, so I don't want to short. Okay? But you take the trade off at break even when necessary. Didn't work. They don't all work, but it worked enough to say we're getting out of the way at break even. Right? So if this is one of those outlier trades that's going to go further after this, away from the 20, and whatever, I still think it's a better long than a short. We're getting near these pivots right here. Let's see, what's our next level? Maybe it gets to 361. That would be quite a stretch if it could actually get all the way to 361. If it does that, it's an easy long. I'm even thinking right here off the pivot, it's worth one more shot. Uber is through the number by 10. I'm going to go Uber long right here. That's right here, 25-cent stop Uber right now. Not even waiting for the turn. But again, this is super aggressive. I'm not telling you to do that. I'm telling you what I'm doing. What you should do textbook-wise, wait for the 2-minute bar to reverse. Wait for the whole number to break back up. Right? I'm just kind of going on a gut feel, looking at the chart, looking at the pivots, trying to feel out where I think it can go. Plus, I had a good morning to start. Guys, spies to the whole number. We're definitely going to do that long off of 361. If you're short, start taking profits, tightening up your trail. Probably getting time to bounce here. Getting close. Come on, 361. We're going to hit it. We're going to hit it. I'm getting some of it. I don't want to miss this one. I'm going to try spies. I'll just give it a little extra on the back end. If we don't quite get through the whole number, I think we're in a good place for the bounce here. Yeah, sure. We're going to try along. Yeah, I mean, look where the 20 is. You either have to wait. Like, this is what I said earlier. You can't short this far down, right? The short happened back here. We did this long and said, get to the 8MA, then look for the sell setup. That was the sell setup. Once it broke the pivot, and we tried this bounce, it didn't work. Technically, that's not a bad looking GBI. It was just the look of the pattern. I'm like, yep, we're doing this one. It was the right look, right location, like everything about it was good. Okay. And that's understanding gut feel, right? Sometimes you just see the look, you just know I'm not waiting. This is it right here. This is the right location we're going. But when you're first learning, you want to wait for that confirmation, because if it doesn't go right, then the question is, well, where is it wrong, and how long of a failure before I know to get out? You know what I mean? You don't want to get caught up in holding a loss because you went early. You're better off waiting on confirmation. That way you can put your stop in, and if it doesn't work, you get stopped out. You know when you're wrong because you waited for confirmation. Like spies here, guys, this is way extended. This is super extended right there. Bordering on climax. It's a measured move. See the GBI? There's the high. There's the low. Yeah. So you can wait for the whole number trade to bounce. But this kind of extension, I don't think we're going to get all the way to Haas. So first 2-minute reversal bar, you could take that trade. I would take my short profit if I had it. I would go to like 75, super tight on the trail, book it. And this is just out in space. It's just hanging there. I don't think we flushed the whole number. So I'm going to do it long with a 50-cent stop right here. Just because I don't think we can go that far to the bottom. So somewhere in here, I think we're going to find the support. And the 2-minute bar is getting big, right? So again, this is aggressive trading. When you take it before there's a confirmation, when you take it before there's a closed bar, you are basically guessing this is support. This is obvious support. You see it? This is where if it hits that, it's a no-brainer trade. Okay? You take it all day long off of that 15-minute 200. Now, if it doesn't get that far, then where do you take it in between? Well, you could do a 2-minute reversal bar. You could do a 5-minute reversal bar. You could do a 1-minute reversal bar. You could do a lot of different trades. Okay? Or you just simply wait for it to get there. Okay? I don't like waiting when I think it's a stretched out play. Now, let's say that I get my 50-cent stop and it gets hit. Okay, so it's one loss, but we had a lot of earlier wins. We get back a little bit, and then I would just have to redo it once it tested this area and proved a hold. Nice trade on Uber, guys. See if we can get all the way back to that 8. It's going to produce some nice money. But if it doesn't get all the way to this support line, okay, and it starts bouncing, by the time it puts in a reversal bar, if it's at 75 or 85, right, and now you're taking it there, you'll look back and say, oh, well, I should have taken it down there, 45 or 50. But if it went all the way down to 0, you'd be like, oh, I shouldn't have taken it at 45 or 50 because it just went further, right? So there is no perfect method. You just, and again, I started this day by saying you have to understand risk reward. You have to understand money management. If you don't, patterns are worthless to you. Right? And that's understanding how to take the trade with share sizing into your risk. It's not a fixed share trade. You can't do the same amount of shares every time. You have to adjust shares based on is similar, right? If you lose on a trade, your losses should look very similar across the board as far as max losses. They should not be 200, then 50, then 300, then 80, then 500, then 100. That's all over the place. If your max loss is 100, then that's it. I should never see it go above that. I should see some less than that because there will be times when you tighten up your stop, right? And you have to redo it. This thing is really stretched out, guys. So if we get to 0, if we hit whole number, I'm going to have to kill it and then replay it off the whole number because this is going a lot further than I thought it would. So remember I told you, professionals are wrong. We don't stay wrong. So we take the trade off and then we have to wrong with that. You take your stop, you redo it. Because if you try to average out of it, your average cost is not going to work. Now, this is a good trade. Guys, if you haven't tried it yet, try this trade right here. It's a good trade. Yep, Sharm, definitely try that. And we look for the bounce-a-roo. Guys, if you got this short, then cover. Yeah, if you had anything short up in here and you hit that target, book it. Don't even trail it. I'm telling you, book that short. This is way stretched out here. You're going to give back way too much money on a trail at this point. Book it. Book it, book it, book it. Twitter whole number trade. Let's see. Twitter. Not bad. Yeah, it's not bad. It's got that little bit of waterfall look there. 45. You got room to get 60 cents on the upside. That's not bad. Now you see how Apple's finally coming in because the market got so far down. Remember I told you the diversion would not stay all morning at such too big of a drop right there that as strong as Apple was at the start is like, oh, okay, wait a minute. If we're going this far down, I can't, you know, there's only so much we can do. Eventually that diversion has to pair itself off. You cannot have the market going up, or the Apple going up, up, and the market goes down, 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 down. It just can't do it all day. 20, 30 minutes, it can do it. 4 hours, unless Apple was on an earnings play. And the reason I say that is when there's earnings, all bets are off, right? There are no rules about earnings plays. They can go all day. You could have a stock just totally negate what the market's doing, whatever it normally does. Its ATRs go out the window. When you have earnings plays, it is a wild card, and you just play it as it is. Don't try to use any relative strength or relative weakness. It's on its own page that day. Okay, nothing else matters for that day. A couple of days, maybe 2, and that's it. After earnings are gone, then it's back to normal. Snap, let's see what you got. Snap at a whole number. Yeah, it is. You don't have as much extension there. Yeah, I certainly wouldn't short it. It's nice to have a little bit more extension away, but it's not bad. You're going to see a lot of patterns at that same location right now where the odds of follow through from this point are low. It can happen, guys. Look, any markets do go beyond their norm sometimes. Stocks do trend beyond the normal 3 to 5 sometimes. You just want to get in the habit of playing what usually happens, right? And when it doesn't, you just get out. It's not a big deal to have a trade not work. But like I told you earlier, you want to be in the habit of doing things that are going to work consistently. You're not going to consistently get 5-bar drops through a pivot that keep going another 5 bars, right? This is overdone. I would never short this. I don't care if it goes another $1. I would never short it. So the one time it might go something stupid, you go, okay, I missed that trade. So what? Because the next 9 times you do it, it's not going to go down $1. Yes, you can check for earnings plays. The question is there a tool to check? There are a lot of free resources out there on the internet. The easiest one that's free is Yahoo Finance, and they actually have a nice little earnings calendar. So you just go to Yahoo Finance, earnings calendar, and then every day it tells you, you can look ahead, you can type in a symbol, find out the exact day of the earnings, or you can just look at the week coming up or the month and see who's got, who has earnings on deck. That's a nice free tool for you. I'll give you that. There's the link. Just go right to it. Free, nothing you have to sign up for. Gives you all the dates. Is it going to gap fill? That would be pretty impressive if it does. See this gap? Question, is it going to gap? I don't know if I can gap fill or not. I'm telling you, when this bounce comes, it's going to be a good one. So I cannot, there's no way I'm shorting this, guys. Got to watch. Got to have patience. You can snap, stretching out. It's not a short. It's weak. It's falling, but it's too late. It's like missing the train or missing the boat, and you're like, oh, but I can still get on. Can't do it from here. So if you're in it, that's awesome. You're killing it. If you're not, you got to wait. Just jump. That's usually not a good strategy. All right, guys, that's 2-minute bars starting to form. Hold on, I'm doing it right here. Spa's long. Come on, Spa. So again, we're wrong early. It's okay to be wrong. Just don't stay wrong. And here comes the bounce. Here comes the bounce. Here comes the big number one. Now, we hit Hoss. Break even goes in. We take this out. We're going to get a big, fat reversal bar. And this is what I was trying to say earlier, guys. There are times when you feel like, God, I'm missing it. I'm missing it. That's that FOMO thing, right? You're not missing it. You missed it. Like it's over, right? So you can't. Just think about it, like just a few minutes ago, I'm telling you, don't do it, right? Because I can tell the more this gets stretched out, people start getting, it's like, God, we're going to miss. And I'm telling you, it's the exact opposite. The more it gets like this, the more it's going to bounce, right? And you'll just make it on the upside. So if you didn't short something that went way past what it normally would, that's okay. You missed it. Don't worry about it. In fact, you should take the opposite mindset and you should start cheering for it to go even further, right? In other words, like, okay, I missed it, so now I want it to go way past what I missed because then remember I told you about market cycle? So the longer this goes down, the better bounce you'll get on the way back up. But multi-part, this is a fluke thing here, guys. That much follow through. I don't know if there was some news that hit. I don't know what happened. To be honest, I'm not watching headlines. That's not typical. It's not normal, and that's okay. You don't panic. You don't jump in. You don't say, well, yes, we should have shorted, so let's short now. By the time you see it like this and you see the space from the 20, you realize, like, yeah, that's way overdone, and there's no way you can short that now. Okay, you just got to let it go and wait for the long. The Uber here, yeah, it was a good trade here on Uber, and then you're getting a second attempt right there. But this market trade's gonna be a big bounce. I would not be surprised if we get all the way back. See this little GBI where we failed? Not going to surprise me at all if we get all the way back up there. We have the same move down, you have the same move back up, especially when we get back over Haas. If it doesn't get stuck here, I think you're going to see it rally pretty hard. This is the only little stick point, right? Which is why you should put a break even in if you bought off the bottom. And you're hitting that. If it gets stuck, it starts going sideways and the 8 catches up. Then you're going to get the sideways drift, and we're not going to get much follow through. Once we get past this, get a pretty good bounce going. The trading challenge guide, that's for tomorrow. It starts on the 1st. Remember, today is still November. Just because it's Monday, it's still November. Challenges tomorrow. Come on, baby, let's go. Let's go. This is the little sticky point. We get past that. Blast off time. There she comes. There she goes. Oh my goodness, Danny. That's the rip we're talking about. That's the rip we're talking about. Beautiful. Beautiful. So let me show you something else here, guys, because that's exactly what should have happened. It got a little bit further extended than I would normally expect. And I'll show you the reasons why I say that. Again, things are not perfect with market patterns, but there's a general rule that talks about, the market cycle and the multiple bars and all that stuff. So let me show you something else here. All right, there's something else called measured moves. Markets tend to move in, measurable patterns of events. So what I short, I'm going to go back and draw this here. Remember we said multiple cycles go like this, right? And what we don't want to do is short a multiple bar drop into support without the corrective cycle and then the move over. Now, things tend to move in 3 to 5 bar patterns. We also have something called 1 bar strategies where you get a move, there's 1 bar pause and the move continues. That's what happened here. At the time it's set up, I didn't like it. I couldn't get a good risk reward. So I skipped it. And then I try the opposite down here off 361 and that didn't work. And then it got way past normal. All right, so let me show you back up this trade because it's pretty key here. All right, so this is that multiple bar drop into support. You don't short that, okay? Until what happens? Until you get your corrective bounce. So here's your break of the pivot. You should get this, and then you should roll if you're going to stay weak. That's it. It's 1 bar. It's called a GBI, okay? 1 green bar pause. That's the equivalent of this move in the market cycle. It just happened on one bar. So when that broke the low and it was trapped under the pivot when it did it, it's actually a valid short. I just couldn't justify the risk reward based on the size of that bar because I truly did not think we'd get past 361. So if I'm playing for that target with that risk after being down on a gap and down on the second leg, it didn't make sense to me, so I didn't do it. And if you did it, that's fine. Personally, I just skipped. I didn't like it. Now, if that is a GBI and that is going to trigger, then it becomes a measured move theory. And you say, well, what happened prior to the GBI as far as amount of movement should happen after the GBI. So that puts us right about in here for support. Okay, right about there, that 360.50 area. And if you remember, that's when I said we should be getting a bounce right about here. There's your 360.50 area. So that's the reason why I was trying that one. Okay, GBI, it did trigger. It is a measured move. Typically, you won't get much more than that without yet another corrective bounce. So from here, it should either bounce up and roll again, or should pause and go sideways. The fact that it just accelerated way past that move, right? Here's your GBI. There was your 2-bar drop. That looks pretty good. Once you get this, now you're getting climactic, okay? Because you were trending. I want you to see this. This is the key difference, guys, between acceleration and acceleration versus a trend. If you look at how, I'm going to take these 2 bars off again. All right. If we put, you can see the angle. Look at these channels right here. I'm going to draw. I'll do the first one in, change the colors for you even. So we'll make the first move. There's our first window, right? And we'll make that green as well. Okay. And then we had the back angle of descent. So we'll do that one in black. So now is the lower channel, right? Like that. So here's our first one. Here's our second one. See them? Okay. Now, if this is going to continue, just kind of go like this, right? That would be the normal rate of price descent. Now, what happens instead is this. Changes, right? It was going like this. See it? Then suddenly whoosh, fell off a cliff. So that's the climatic effect right there. When you're trending, right? When you're trending, I call it the like Niagara Falls effect, the waterfall. When you're trending and then suddenly you go like that, that's it. That's time for the bounce. Right? The last thing you want to do, right? The rule about shorting multiple bar drops of support is one, but definitely not that effect, right? I mean, here's the 20. The entire move is away from the 20. Oliver has like 500 videos on YouTube about away from the 20, right? It's one of the most powerful concepts. There's no way you can short that. I mean, you could, but it's a bad play. So there's the break at 360. You definitely don't short that. And I know people want to, and I know people are doing it because I can see every order that you do. Every single order that's being sent, I can see it. So I saw people shorting spot, and I'm like, what are you doing? Don't do that. Okay. Now look at this. What did I tell you was going to happen? You see? So when you miss the move, guys, or you're wrong, so the 2 lessons I gave you. 1, professionals are wrong, but we don't stay wrong, right? I did not think it could get that far. I took a shot. I got out, waited, got back in. There's no way to jump on a short at the last minute. You missed it. I also told you that the more we stretch out, I didn't get the short. It doesn't matter. I know the more this goes, the better this will be, and we're going to get this one. And we got this one right off the blow, and we are just like killing it now. Okay. So if you panicked and jumped in short there, you took an L, and if you were scared and you didn't buy, you missed it. And if you had a short going and you booked it out, then you killed it on this side. But look what's happening on the upside, right? So anybody that shorted this, odds of you covering at the bottom are pretty slim. You probably covered about in here. So let me show you what I meant about if you miss it, it's okay. You generally will make it on the other side. Ideally, you want to get both, right? You want to get through, you get the short and you get the stop and reverse, right? Be greedy in the right times and make all that money. So, if you took the short there and you probably on the way down either booked it at 360, which is what I said I would do, or you held it and then on the reversal profit, you made this much, right? There's the GBI, there's where you covered. So you made this much money in terms of dollars and cents of the move. Now, if I take this same arrow, right, and I'm just going to draw it this way, like this, and now we put it on our long play right here, isn't that the same money on the upside? Because we bought right down in this area. I said we're going to do it right here, right now. Isn't that the same? It's the same amount of profit. So who cares that you didn't get on this side? You turn around and get it on that side. Ideally, you want to do this. You want to short it, cover it, and reverse it, and make them both. Right? That's the ideal. But if you miss one, or you take an L on one, don't panic. Just root for it to get further away, because then the bounce will be even bigger. Now, what if it gets up here, back to that GBI started? Then guess what? I'm going to get two of those. I'm going to make twice as much as that drop made, because we got such a tight entry down here. Okay. The other thing with the climatic decline, you see how the volume started to spike? As these bars started to drop, that volume started to surge. So the two biggest bars of the drop were the two biggest volumes, and then that reversal. This is a 180. All of you that are always asking me about what is a 180, is this a bull 180? Is that a bull 180? This is a bull 180, right? This is truly a 180. Big volume spikes, huge reversal bars, the two biggest bars of the day, far from the 20. That is a 180. Not all the little stuff that you guys look at and tell me every day is 180s. You finally saw one. So you have a little climatic decline off of a trend and a bull 180. How often do you really see that happen? Full climatic declines of bull 180s, they don't happen that often. But when it does, it's a very powerful play, which is why I told you, don't panic, root for it to go lower, because we're going to hit a really big bounce in a minute. And we had it. Right? So you got to see a lot of good things today. You got to see me take a lot of good trades. You got to see me pick off some bottoms. You got to see me take a L. You got to see me take a break even. Went way further than I thought it could, and still capitalize on the back end. Okay? You got to see a lot of good stuff here. Lots of good stuff. Jay, you want to trade the derivative of the SPY? Yeah, I see your point on that. I'll tell you what, send me an email about it as a reminder. Okay? I'm not. I understand what you're asking me, and I think you got a point, but I won't remember after we're done. So send me an email about it. Now, is the next sell setup generally, because you don't take the next sell setup, right? When you identify something as a climactic finish like that, the next sell setup usually will not make a new low. Okay, typically makes a higher low or go sideways. right? And you see that 15 minutes, pretty good. So we might just kind of drift from here, or if we do go lower, I don't think it makes a new low, and you have to decide if there's enough room in there that you want to play it for the higher low. But typically, I would not short that next wave after you identify something as climactic, which I believe this is. So therefore, I would restrain myself from the next short. Which is why it's important that you learn how to identify things correctly. Because if you identify something as extended but not climactic, then you would look to maintain the trend, right? You would look for it to keep going. What software do I use to do this stuff? The chart stuff is Snagit. Felipe, the fast track, yeah, if you're already in the guys, if you're not in the program yet, the fast track thing is not an applicable question, but I'll just address it because we have our own traders are here too. That moves you to the higher level, the $100,000 buying power, but you can't skip. You have to be in a program before you can upgrade to fast track. So if you're already in the program and you want to upgrade, you can upgrade after. But if you're joining, you cannot join at that level. It's only for existing members. So if you're already in, then yes, you would upgrade to the fast track. Takes you to the $100,000 buying power, gives you the 1,000 shares. Here's that GBI. Here's the 20 guys. We're getting pretty damn close. Pretty damn close to the 100% rebound to that GBI, right? So I wouldn't be shocked if we can get all the way up there. We're almost there. There's the little higher low. We said we're going to skip the sell setup. We're not going to do it because it's climactic. You typically don't get sells to work out. I mean, I'm getting tired. Getting tired of being right. That's another funny one. I don't care who you are, that's funny. I stole that from my little brother, man. My youngest brother used to say that all the time, and he'd stretch. He'd be like, oh, man, I'm tired. And someone would be like, what are you tired from? I'd be like, I'm tired of being right all the time. It's just hard work. Oh, it's too funny. Yeah, no, it's good. Gee, steal that one. It's a good. I don't know where he got it from. He might have stole it from somebody else, but he used to say that when we were younger. I used to crack up all the time. Like, I'm definitely using that. But listen, the key to this, guys, is this. The professional mindset is you don't stay wrong, okay? I was wrong about that buy right there. I thought measured move, whole number, we're going to try the bounce, and it did not work. Okay. Now I'm going to root for it. I'm not going to chase the short. I'm not going to hold the long. I'm going to eat it, and I'm going to wait, and I'm going to redo it because it's going to be a hell of a trade. The more it stretches out, the better the bounce, right? So you can be wrong. You will be wrong. You're going to be wrong every day you trade for the rest of your life. You understand that? Every day you're going to be wrong at some point. The question is, now maybe you're going to have a day where you're not. Maybe you get lucky and there's a day where everything goes perfectly and you're not wrong. Okay, but you just have to assume that every day you trade for the rest of your life, you're going to be wrong. So at what point do you cut it out? How do you know which one is going to happen? Maybe you're wrong 1 out of 5, maybe 3 out of 5, maybe all of them. So if you can learn how to eliminate the loss quickly so that when you're wrong, it doesn't eat into your profits, you're a step ahead. Guys, give me one quick second here. I'll be right back. All right, guys, I apologize. I had to deal with that real quick. We had a small risk issue I had to get involved with and fix. Um, anyway, what was I saying here? Oh yeah, be wrong, don't stay wrong. Right. So you got to see that happen. I'm glad that that happened. It's not, some people get all bent out of shape if they're wrong, because you're wrong. To think you're going to have every single trade work is ridiculous. How can that be? How can you have every single trade work? It's just not possible. But can you control your risk so that when the trades don't work, you don't blow up? Can you do that? Sure. Can you get to the point where you recognize, you know what, this is not following through, I'm getting out, and cut my risk off to zero? So I started with a risk, I got in the trade, it started to work, but then it stopped and it hesitated, and you know what, I'm out. Risk was now zero. Can you learn to do that? Absolutely. But that's still wrong. The trade did not work as far as hitting your profit target, but you didn't lose any money. And that's where traders get confused. They're like, well, how you're never wrong? That's not the case. I'm wrong a lot. I just don't lose a lot because I'm getting out before the trade goes horribly wrong, right? So as long as the trade starts in my direction, there's a good chance I'm going to lose zero on the trade because I will mitigate that risk instantly. If the trade fails on me right off the trigger, then I'm going to eat one. And that happened today with a SPY trade. I had one break even and I had to eat one. Because the thing just dropped through the floor. I was like, wow, no bounce at all. Okay. And then I said, all right, well, let's let this thing play out all the way to here. Now we're going back in. But if I held that loss all the way down, put you in a really big hole, and then the bounce all the way back up, you don't make any money, right? Because if you think about where that happened, right in this area, right? If you held through that whole thing, that bounce all the way back up only took you to break even, and then you probably jumped out and said, oh, I swore I'll never do that again. Thank you for letting me out. Versus just take your 1L, reestablish your position here, and then make a 4-to-1 move. Right? So yeah, you're going to be wrong, guys, and it's perfectly fine. Know that you're going to be wrong going into it, accept it, and that way when you're in a trade, you won't hesitate. Because if you think every trade's going to work, now you never want to take a loss. And you're like, oh, is it going to stop me out? Oh, I don't want to get stopped out, Danny. I don't want to get stopped out. You're going to get stopped out. Well, I don't want to get dinged out before the big move. You are going to get dinged out. Well, but I don't want to. Then don't trade. Like, I mean, you want, what do you want? I want every trade to work. I never want to get stopped out. I want pink skies and unicorns with rainbows. I mean, you're dreaming. You're in this fantasy world. You're going to get stopped out. You're going to get dinged out. You're going to have trades whipsaw you. You're going to have the market give you the finger and run wild after you get stopped out. That's trading. You're going to have it happen. So, again, what I told you about expectations versus disappointment. If somehow you're coming into this thinking I'm never going to be wrong and I'm never going to lose, you're going to be sorely disappointed, right? Sorely disappointed. But if you come in and say, all right, a lot of trades don't work and I'm going to mitigate my risk and I'm just going to play the numbers game, and when it works, I'm going to maximize, and when it doesn't, I'm out at break even or better, dude, you're going to have a good day every day. Because when they don't work, you'll be like, yep, next, next, next. Like you'll think 2 seconds about it. I got dinged out. Next. But if you get dinged out, you're like, oh, I got dinged out, Danny. It didn't work. Well, now you miss the next trade. You're too busy worrying about that one. Like, what if you didn't get dinged out? What was going to change in your world? Let's just say that trade that stopped you out that day. Oh, man, you should have seen it. It stopped out right as I stopped out of reverse and went to my target. It was unbelievable. And you waste all this time and energy worrying about that trade. Let's say that it didn't stop you out. That one trade, that one day did not stop you out, and instead you made your target. Now what? How did your world change in any meaningful way because of that one trade? It didn't at all. It changed for that one trade for that 5-minute window, and that's it. But you waste so much negative energy worrying about that one thing that has really zero impact on your future as a trader. It's going to happen. I promise you. It happens to me after 20 years. I just stopped worrying about it about 5 years ago. I finally figured out that it wasn't worth the effort. Took me that long to learn that lesson, so please don't waste that much time of your life trying to get around that. There is no way around that. You understand? There is no way out. All right. So for our day here, guys, hold on one second here. Show how our day wrapped up. Whoops. Where am I? You're in the open house, Danny. where where am I? I'm looking at them. I got 8 monitors up here. I'm trying to find where my cursor is on the right monitor. That's what I meant by where am I? I'm talking to myself here. You know, it's okay to do that as long as you answer. It's when you don't answer yourself, that's when you have to get help. So talking to yourself, no problem. Failing to answer, might want to see somebody about that. All right, so here's our day all wrapped up. I'm done trading for the day. So we got Apple, and not a bad little day there. Apple out of the gates, and then we did the AMD with the same move, and then you saw us do the SPYs. We talked through that at length, and then Uber was just a nice little, wasn't my trade. Apple, AMD, and SPYs, I'm going to take credit for finding and managing and et cetera. Uber, 100% someone else's trade. I just took it. That's the other nice thing about this room, guys, is you get all these traders that learn how to find the same types of things. No, that's Fast Track account. That was a maxed out Fast Track going full bore on every trade. I'm not going to lie. That was maxing out positions on all those trades, going for it. Especially after Apple hit, I was like, game on. Game on, baby. Yeah, think about it, G. If this was my regular account, if I was on SPYs here with 2,000 shares, dude, that's like a $4,000 trade on SPYs. I would have crushed that. But again, there'll be other days, right? So what? So I didn't do that today. So I didn't make that today. It's not the end of my world. There's going to be you know what, next year, I guarantee there's going to be a SPY trade that looks like this. And I guarantee I'm going to make $5,000 on it when it happens. And the year after that, and the year after that, and for the rest of my life, I can do this. So what if you didn't get one? You just have to realize, guys, that that's the mindset you need. Okay? You have to get there as a pro. You start worrying about every little trade thinking it's the end of your world, it's going to mess you up. I've been down that road, telling you from experience, it's a bad way to do it. All right, so we're done with the training part. I'll take a couple questions here, but let me do this first of all. Let me show you, let me get the program slide up for review real quick and answer some questions about the program. One moment, please. All right. I had this here somewhere. Yeah. Okay. Here we go. Got the slide up. Let me show you this. Give me a minute here to get the camera up. And someone asked, well, how do I see all the trades? Remind me to show you that too when we're done. It's pretty cool. The risk manager tool is pretty awesome. Okay, so the way the program works, guys, you go through the training. Everybody goes through the same level of training. Okay, so it does not matter if you're on if you're in a master level where you have access to all the VP all the way up and the 80% payout, or if you're down at the self-start level where you go halfway through and you only get a 40% payout, right? Or you could go all the way down to the the entry level where you get a 20% payout. And personally, at 20%, that's not enough to get me out of bed. So I would at least look here or higher. But all the training stages, the point is they're all the same, right? You see this 50,000 buying power, $3,000 profit to graduate. You go up to pro trader, 50,000 buying power, 3,000 to graduate. You go up to master trader, 50,000 buying power, 3,000 to graduate. Okay, so everybody trains the same way unless you upgrade to fast track, then you move to this $100,000 level, but you can't join in. Okay, so the biggest difference, guys, I'll try to summarize this quickly for you, right? So you're not getting lost on the website or trying to figure it out. The difference is that the amount of education that you get as well as the payouts. All right, so from master payout level, 80%, then pro 60, self 40. Okay. You can go down the Kickstart, but again, I don't think it's worth your effort. You're going to be upset with yourself if you do that and then it works out for you. Plus, the education is zero, right? The others that don't like it, you don't get the whole point of what I said earlier about you get the room and you get the education and you get the on-demand seminars. You don't get that with the Kickstart. So I think you're spinning your wheels a little bit. That's just my opinion. All right, it's our program, but I'm telling you, from an outsider, I wouldn't do that one. Okay, but it's there because some people just want to quote test it or kick the tires, so to speak. So kickstart, like, okay, whatever. But education for self-start all the way through master. The self-start's on demand only. The equity, the master and pro, you get live education as well as on demand. And then the chat room, I think that's key for all the programs. The study sessions with Oliver, you get more with the higher level programs, right? So there's 4 a month. Master, pro gets 3, self gets 2. So really it comes down to how much education plus what kind of payout you want on the back end, right? Everybody's training though at the same level. So there's no difference of, well, if I do this, can I graduate faster? Can I do that? It's the same thing, guys. Okay, it doesn't matter. All right, now okay, it doesn't matter. Prices for the programs, you can go find these right on the website.
All right, guys, thank you so much. How was it? Did you guys like it? Did you guys enjoy that session? I'm not seeing any comments, so I just want to double check. Okay, I hope you guys enjoyed it. How was it, guys? Was it good? You guys liked it? Okay, it was a very, very special session. The market was incredibly volatile and to the downside, right? I actually enjoyed very much what what we saw. Great lessons, you know. Okay, guys. So Okay. All right, guys. So listen, we still have some of the biggest discounts of the year, right? These are usually the programs that you guys can purchase. You can get into. These are some of the best times to get in here. They have big discounts. They're not as low as the Black Friday discounts, but okay, guys. Thank you so much for attending this session. I hope you guys enjoyed it. It was a very you guys so if you guys have any questions about the programs, you have any doubts, these are professionally funded, professionally trained programs, right? So you get access to the best traders that are actually in the market, right? You're gonna get education, you're gonna get capital, you're gonna get all the funding that you need. You can start from $50,000 up to $500,000 that you can use the capital, Oliver's capitals, and of course you can share the profits with him. It's a business ultimately. So make sure that you are talking to somebody in our team to answer all your questions, right? So you can get all your questions answered and you can join this week, all right? So make sure you do that. Also make sure that you are talking to somebody that is in this list and that name corresponds to the number that is in here, right? There's a lot of people that are trying to scam people out there that really want to get into this program, and they offer them whatever deal they think that they're gonna get just to get their money. So make sure you are talking to somebody in this team, okay? Any other questions? If you want to access the program, you can also go to this website, okay? cybermondayolivervelez.com, right? You're gonna find everything that you need in there. And if you have any questions, again, make sure you contact one of these people, one of our staff members. They're there to answer your questions, and make sure that the number that you're talking to is in here. If you need to take a screenshot of this, make sure you do that, so you make sure that you're talking to the right person and not somebody that's trying to make themselves appear as somebody else, because there are people out there that they are doing that. Okay, so once again, guys, this is a great chance. This is a great opportunity. These are the lowest prices. Some of the lowest prices of the year. The lowest prices were in Black Friday, right? But this is the next best deal. All right. If you haven't gone into the program, make sure that you take advantage of this. All right. Make sure you take advantage of this. These are the best prices, best moment. I did it myself. I did it a few years ago. Best decision of my life. As Dr. Dan has said, it takes work, it takes time, but you can definitely do this, right? Right? If anybody can do it, it just takes work, it takes dedication, discipline, right? And we're gonna give you that. We're gonna give you the right education. We're gonna give you the right training so you can develop that, right? So take advantage of this. This could be, if you see yourself in 10 years doing this, just go ahead and do it, all right? If you have any questions, just go ahead and contact, again, one of our team members, right? We're here to support you, all right? Whoever you're talking with right now, just make sure it's the right number, okay, guys? And I hope to see you soon. I hope you really enjoyed the session. It was a great session, all right? We saw psychology, we saw technicals, right? How to approach the market, what are some of the biases that we can have when the market moves or we don't get what we want to get. Those are great psychology insights, things that you can get only from professionals. These things you cannot get from the internet, right? You cannot go to a website and get all these things, real-time experience. So we have this every day in the program, every day, every morning, every afternoon, right? Well, when the market's open, of course, right? We don't get this on the weekends, but we get this Monday through Friday when the market's open. We get this hands-on, real professional guidance, okay? Just like you saw today. So again, my invitation, guys, don't let this go by. Take advantage of this very low prices right now, some of the lowest prices of the year, right? Don't let this go by. We're likely going to see this until maybe, we don't know, next year. And they're likely to be higher, I don't know. But this is the best time to get into the program. Whatever program you want, whatever questions you have, make sure you talk to somebody on this list. Okay, guys?